All right. What is up? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Hopefully, everybody is having a fantastic week. This is the week before Christmas. Christmas Day is this Sunday in America. It's one of, only 2 days where the FX markets will even be closed. So, this Sunday will be Christmas, typically the week of Christmas, and then the following week, because that's the week of New Year. The last 2 weeks of the year, if you will, typically don't have a lot of volume, simply because a lot of people go on vacations. They're traveling, going all across the country to be with loved ones in this time. So, as you have undoubtedly noticed, there really hasn't been a lot of stuff happening. We did have a profitable trade set up last Tuesday on the last stream we did, and we were hoping when we come into this session, we would be able to find another one. Yesterday, we had the S&P 500 have a pretty explosive move to the upside, but ultimately we were looking to fade this move. There were two specific levels that we were going to be watching. First was going to be old weekly support at 39.63.70. And then ultimately, we were going to be watching last week's open. As you can see, we traded up to here, which that high would be marked at 38.94.60. Not really into anything. Nothing. So on the daily, you can see if I pull this up over here, where you stopped is really nothing. And there's nothing there. The only thing that one person could say could potentially be the reason why you're pulling back is because it is December for last Friday's candles open. I mean, that's it. But typically, these aren't areas where we would look for entries. They're not areas where we would be looking to do anything. But simply, if you go over here and look, you can see that it traded right up to it, retested it, and it since has rolled over. Now, unfortunately, as far as Bitcoin is concerned, the only trade that could even potentially be warranted this morning would be a long, because the Trade Talk community took a short this morning from this resistance level right there. That is my short position. Yesterday, we took 3 trades. All 3 of them were successful. So if you count Tuesday successful trade entry, and then 3 yesterday, and then that one this morning, I mean, I'm 5-0 on the week as far as trade entries goes. Pretty much done for the week. We will keep an eye on Bitcoin. It is coming into some intraday support here, and we will analyze it. You can see there is a daily demand level right there. And I would expect it to at least bounce from there. Yesterday, you traded down to it and bounced. This morning, you opened. Traded a little bit up into yesterday's range, rolled over, and now today you're coming back in for a retest potentially of that level. So if this is going to be just a pullback on the S&P 500 and you expect it to move higher, then in this area is where it should find support. I don't like the fact that it has retraced the breakout move yesterday. So right now, as long as you're trading under the daily and weekly 21 exponential moving averages, I would suggest that you are looking for short entries. There is your daily 21 on the S&P 500. And if we go over here to the weekly, you can see it's pretty much in the same spot. So I figured at least we would get a retest of it. So you can watch weekly support. That is where S&P 500 is currently bouncing. Last week's close, that is weekly support. If you go back into the hourly time frame, you're going to see just how canny this stuff really is. So there you go. All right. So on the Bitcoin trade, I am going to lock up profits right now before the open, because the open's in 5 minutes. And we know that that will be the last surge of volume for the daily range. Daily range is obviously bearish. You are blue. That means you are trading lower than the daily open. But if you look at this candle right here, that was a pretty big bullish candle. And for the last 2 days, you've made literally nothing. So the structure of the last 3 days looks to me like it does indeed maybe want to look for an advance today, but you are under the 21. So if you do decide to get long here at 16,764, please mitigate that risk. As always, if you are taking any trade setups or ideas that I provide to you on this live stream, the money that you lose is on you 100%. Yo fault. You cannot blame me if you lose money. All right. You shouldn't be taking advice from some random person on YouTube, anyways. But with that being said, we do provide trade entries, trade exits, profit targets. So let me go ahead and fix this position real quick so that way I can focus directly on you. And we'll try for 16,766. Get that in and set that for 70%. I want to take 70% of the position off because if we do get any downside continuation, entering roughly close to the high of day is going to be a pretty decent spot to be positioned. It's not the exact high of day. The exact high of day on Bitcoin currently on the Bitget platform is $16,865. Let me just make sure everything is working over here on this end. Good morning. Good morning. Merry Christmas to all of you. Happy New Year. Happy Hanukkahs. Whatever it is that you celebrate. Happy days ahead. And it does look like I just got filled on that position. Perfect. Locked in 20% gains on that trade. It's not a very big range day, but thanks to Bitget's leverage platform, it allows us to use very small amounts of money to make very large amounts of money due to leverage. So yesterday, the trade setup, well, here, let's just discuss Bitcoin's trade setup for potential and then this trade setup for potential. This is the line that I would be wanting to see a reaction at. Once again, that is the last week's close. That is weekly support. It's the lowest close, and price will respect that. That is also this week's open. All right. So if you're going to remain to be bullish on the week, because as of right now, you are bullish. It is Thursday, so there's a higher likelihood that the low of the week is in. We don't necessarily know if the high of the week is in, but since you're trading closer to the high than you are to the low, being this thing will close tomorrow, we can say that there's a high likelihood that the low of the week is in. Unless you just get some kind of nasty bearish news, I don't think you'll get below 37.75 by tomorrow's close. So, with that being said, the open is the area to watch for potential trade entries long, but I am definitely bearish. I have a short position open. Yesterday, we opened up a short trade on this asset right here. We were watching this level. This is where we wanted entry with the spread. I got filled down here because when it traded up there, it did not stay up there very long before starting to drop. When I market ordered in due to the spread was 2 pips wide. This was where my entry was. That's where my stop loss was. And on this candle here is where I took profits on the move back lower. So that was a beautiful 3-to-1 risk to reward. Over the night, it traded right back up, took me out of the trade, and then since has rolled over. And then the same goes for this setup here, Euro CHF. Yesterday we were watching this for short entries. We took a short entry on it. Here, let me make sure that's it. No, sorry, Euro CAD, not Euro CHF. Euro CAD was the trade we took. Same scenario, took the short on the red line. We have gotten the open. We're 1 minute into the open. As of right now, Bitcoin is still continuing to push lower. Remember, I wanted to see a test of 16,742. I need to see a wick down to it and a bullish reaction. On the level on the SPY, it's 38.42. Can't do anything until price gets there. If price gets there and shows an inability to close candles under it and it starts to bounce, you could potentially look for a bullish reaction. Did you notice that on Bitcoin? So that's, typically where you're going to put your entry. Long targets on a long position to make it easy and higher probable, I would probably use 16,782 as that first initial entry, take profit if you were to get that bounce. But first, we got to see if we're going to get that bounce. Like I said, the market looked droopy to me. That's why I was looking for short side entries. Unfortunately, it just played out before we could actually get the stream going. So in the Discord, we were on this candle here. I told everybody, this is the level to watch. Oh, and a big drop. So it doesn't look like it's going to be a long. So, yeah, I love it. I love getting downside continuation, especially when my short entry is as close to this price as possible. Right there. This was the entry. When we wicked up into that, that's my short entry. 16,849 over on the Bitget platform. I have 16,844 spot 50 as the actual entry. So that's my entry right there. And Bitcoin is rolling back over again. Nice. Beautiful trade on the day. So yeah, we've been pretty much hot this week. Same thing happened on the Aussie CAD short. Yesterday it was a phenomenal short trade, took profits, moved stops, and then this morning it comes right back to the entry, knocking me out of the short trade. So basically I was hoping to ride any downside continuation on both those assets. If you remember at the beginning of the week, I tweeted out that I was looking at a couple pairs for dollar short, potential dollar short hedges. Here they are. So this is the tweet that I put out. This tweet was put out on Sunday. It got 12 whole likes. If the sellers have the same conviction next week as they did this week, my two favorite pairs for USD, hashtag DXY strength, NZD USD, Euro USD. That means you would be looking for short entries, NZD, USD, and Euro USD. Let's pull Euro USD up right here. We have it. So as of right now, this is what it looks like on the week. So I was looking for shorts, but for the last 4 days, it's been very choppy inside of a range. All we did was took out yesterday's high, and now we are rolling over. That is a liquidation break. In fact, I do believe if you look close enough, this wick actually got above these two wicks as well. There's your expansion here. So yeah, trade worked out. NZD USD short, also what we were looking for. And if I go back over here to Monday, right there is Sunday to Monday, looking for shorts. This was the price we were looking at. There you go. Right there, weekly res. You got an opportunity to get short at weekly res on Monday. And if I blow this chart up, you can see it traded right into the exact price that I told you to watch for short entries. So hopefully you capitalized on that as well. We've been really, really hot. I mean, there's nothing else you can say about it. Hot like fire. What's up, everybody? Good mornings, good mornings, good morning, good afternoon for some of you, and for some of you, good evening. Heath, percentage-wise, what's the ratio of how much BTC you're hodling, and what percent of your portfolio do you trade? What do you mean? What percentage-wise of my ratio of how much Bitcoin? In conjunction to what? My net worth? I would say it's probably close to 15 to 20%. So I am a little bit over leveraged holding Bitcoin right now. If we continue to print good CPI numbers and we still continue to see the market sell off, because remember, the majority of that Bitcoin is in very, very cheap. So I am in very good profits right now. I will probably take half of the position and close it off, put it back into cash, bank that profit, and then just hold, roughly 7% until the bear market ends, or at least starts to wane, because there's really no point in holding a dead asset long. No point. And I'm not saying that Bitcoin is dead. I'm not saying I'm expecting it to be dead and end up being zero. What I mean by that statement is simple. There is no point in setting in a position that is losing you money. Remember, there is a cost basis to this stuff, or that's not the word I'm looking for, but by setting in an asset that is depreciating and you're watching your P&L depreciate, you could close that position and allocate those funds into an asset that is appreciating currently, right? You want to basically move your money around to where you can capitalize on the actual trend. The trend is where you will make the majority of your money. Learning how to do this, being an investor or being a trader, we are relying on the same thing, and those are trending markets. Although being a day trader, we are able to capitalize and make percentage growth on any portfolio simply because we are making intra-week profits. So that way, while everybody else is sitting in stalemates or buying downside protection with puts or however, we're actually making money in a market that's not going anywhere. But the thing is when I'm trading Bitcoin, I'm using an inverse swap contract. So the profits aren't paying me out in fiat. The profits are paying me out in more Bitcoin. All right. There's a purpose and a reason for doing that. And I would expect you to do your own research to find out why. Instead of using the capital gains that I make from trading FX and stocks, I want to use those funds to pay my day-to-day expenses. But I also want to accumulate as much Bitcoin as I can without buying it. So to me, it's almost like I'm being given free Bitcoin. And I love that. Absolutely love that, because Bitcoin is money. I mean, you can turn it into money and by the snap of a finger. So that's why I do what I do. Other people just sit in long positions and watch their portfolios draw down for months to years. I'm not that guy. I am not that guy. I would much rather make trading profits along the way. Well, anyways, fantastic call on the NZD short. And let me go ahead and pull this up. There was another asset that I didn't tell Twitter about, and that asset is Aussie Swiss. If you go to Monday, you can see here, this one has also started its descent, but has since came back to entries as well. So a lot of choppy sideways stuff. This wasn't one of my favorites, simply because it already made the expansion move last week. So I kind of halfway expected this week for it to be slow like this, sideways, or even up a little bit. Maybe go back up and test the old support, 62,984. Did not do that. It just opened and took off to the downside. It's been a little bit of a wonky week, if you will. Bitcoin's not really done much of anything outside of this bullish expansion. But if you pull the chart out and you look, last 3 days it looks okay. But the last week it doesn't, right? If you look at this, at least on a weekly basis, you're going to see last week was a nasty down week. Very, very nasty with a long upside wick. That generally means that the selling was vicious last week. So basically, we were watching weekly res for short entries. That's just how it works. You did not get a perfect test of weekly res, but when that happens, you just got to watch the intraday or intra-week resistance levels. So what did we do? We were watching daily res right here. You can see here this morning, you did get a tag of daily res. Would have been a better spot to look for longs, but you wouldn't have got it, or shorts. You wouldn't have got it today. It happened yesterday. Yesterday it tagged daily res. So today it's just been basically trading sideways in a very, very tight, narrow range. It's only now that we're starting to see the actual breakdown. I was watching 2228 for potential bullish entries on the VIX as a hedge, because we did get a pretty vicious bounce on the VIX last week. But as you can see, man, this thing is coming right back down. So it's not normal that the S&P has a sell-off week with the VIX, which it's not a sell-off week this week. This week you're sideways, but if you look at the last 2 weeks on the S&P, you've got red week, big red week, and then you got doji red week. Red week, red week. So I'm going to keep going back to this, either A, until it happens, or B, it never happens. So that way I can say, I'm telling you, if you're looking for a blow off top in the VIX before you look for bullish entries, you could miss the bottom. Just because the VIX usually, or did in the past, trade inversely to the S&P 500, whoever invests in the VIX for protection from downside SP 500, they didn't this year. This year, that money was allocated to the dollar, not the VIX. We spotted this very early on, while you got people on Bloomberg and CNBC and, supposedly hedge fund managers talking about waiting for the VIX to have that blow off before you can look to be a buyer on risk. They are totally interpreting what the market is doing completely wrong, I think. You can definitely see the capital allocation into the dollar. The dollar was literally the only asset that went up during the bear market. Usually you have the Swiss franc and the Japanese yen. Those are both two risk-off assets. So along with the VIX, the Swiss franc and Japanese yen, those three assets will typically go up when risk assets are coming off. So in a bear market, people will usually look to the Japanese yen, the Swiss franc, and the VIX to be buyers. All three of those assets got beat up. The VIX didn't get beat up. The VIX traded up and down, up and down, up and down, up and down. We can show you the inverse chart to the S&P 500 with the VIX if you would like. But just trust me when I say this. This is where the money went. And this has had a blow off top. This is also the reason why we have been bullish or looking for those lows. Now, we do have long positions on Bitcoin where we did in fact nail the lowest low. That is where we got long here, down here. I am still currently holding that long position. So me looking for intraday shorts, please remember I have multiple accounts, right? So it is what it is. But the short trade is definitely working today. Good afternoon, fam. Morning from the beach. It's a little bit cold to be on the beach this morning, even where I'm at. This morning I had to put my heater on when I woke up. First time all year. Where's my catnip at, says Pepe the cat. It is on your little rat toys that are strolled all over the house. You know where they are. Good morning, guys. Good morning, Tom. Good morning. Merry Christmas, my friend. Good morning, Michelle. Johan, I'm out of lung 16660. I'm pretty sure he means he's out of a long position. I'm sure his lungs are just fine. Can we check Tesla, please? Looks like she is aiming for monthly support. Yeah, let's go take a look at it. Tesla's been getting beat up because of the whole Elon Musk running and owning Twitter now. As far as I've been listening, like as far as what people across your CNBCs and Bloombergs and stuff like that, they keep calling it some kind of weird name. But that's why they are assuming that it is getting beat up really bad because, Tesla makes money. But, like I said, guys, all in all, it might look bad for your portfolio right now, but this is probably the last opportunity or the best opportunity you're going to see. Like, this is a lifetime opportunity, especially if you're young, which most of my core audience age group is from like 35 to 55. So there's not many young people that listen to me, more or less. But if you just happen to cross this stream today and you hear me, listen, this may be one of the best opportunities for you to become an investor in the financial markets right now, because a lot of these assets are very much cheaper than they've been for the last 15 years. So if you're looking for long-term capital preservation and growth, I do strongly suggest that you start buying some of these assets that have come off a lot. Not necessarily Tesla just yet, because Tesla is what's considered high beta, which means it's a growth stock. You invest in this with a small portion of your portfolio because it is a big mover. It is considered more risky. But those more risky plays are typically the plays that outperform in a portfolio in a low interest rate environment. In a high interest rate environment, you don't want growth, you want value plays. But either way, eventually these things are going to find a low, and when they do find a low, that's where you're going to be wanting to get in there as close as possible to the low. Now, trying to pick the low is going to hurt you a lot, because if you come over here and look at this weekly, this thing has been cruising to the downside for the last 3 weeks. Like basically no holds barred, just dropping. We did make a little bit of trading capital on this to the upside by buying calls because I own Tesla in my long-term HODL portfolio. So in order to make trading gains, I do that with options, which allows me to keep my original cost basis. But yeah, we got long here, we got long down here, but you can see that since it has been sold off, so we didn't get any long continuation off of it. They were just basically day trades. Bitcoin just hit 16,650. It's just continuing to go lower. So yeah, doesn't look like there is going to be a trade set up today. All right, so that's Tesla. We do have a couple areas marked out from Sunday's live stream that I did for the channel members and the Patreons, 136.17 and 129.35. We were waiting for price to get there so we could see how price reacts. You can see that it did not react to 136.17. In fact, you did get a very small bounce off of it yesterday, but this morning you gapped down and now you're blasting through. So I don't know if this is just a liquidation run, if longs are getting liquidated, or if there is just that many people selling their Tesla shares because they don't like what's going on in the world today. If we take a quick measurement, you're going to see that this thing is now 68% off. That is one hell of a sell. From September alone, Tesla is down 58%. It is having a bad couple of months. So let it go into price discovery. You can see here we have a big level down here, 129.35. That is going to be monthly support, 129.35. There is a wick under that you could potentially see a spike down to 126.37. As long as if you throw a wick under that and instantly bounce, you could pick up a few shares there, because the next liquidation point would be all the way down to 110.85. So what I mean is, if you just watch this, if you get a trade down to it on like a daily basis, you want to be looking for a bullish reaction there. If you get that bullish reaction there, picking up some shares right at that price, you could potentially get a bounce back up to 148, 145, somewhere in there. That'd be a $25, $30 gain on your shares. Not bad. That's a fantastic swing trade. But we have to wait for it to get there first, naturally. We can't just buy it instantly. We gotta wait to see how price reacts. Is that you might gap under it and continue to roll, and that's never what we want to see if we're trying to pick a bottom. I don't suggest that you ever do try to pick bottoms, but if you are going to pick bottoms, please do it in the way that I tell you to do it, because it's the safest way. Whatever low you put in under 129.35, I'm sorry, 126.37, any wick that you throw through that price, that's the low that I would use to manage the risk from. So you could wait for price to get back above 126.37, buy the asset, throw the stop under that low, and then you will have a very, very tight stop loss. So then you can pick out 2-to-1, 3-to-1, 4-to-1 targets. Yeah, aiming at monthly support, Tesla, for sure. It definitely is, Michelle. And see, you know that. You told me that. That's fantastic. Doesn't that make you feel good? That you used to be in here wondering what in the heck I was talking about most of the time. What is this dude even talking about? Now, after you've been here day in and day out and you see this stuff work over and over and over again, now you yourself are able to identify these high probable areas. That is the goal. That was it. You are doing good. I am proud of you. I'm proud of all of you. I have a very core audience, and that strong core audience it's strong. Like they're here all the time. Here all the time. Every time I go live, they're here. If I went live 7 days a week, they would probably be here. And I appreciate them because they are learning. They're learning what things to look for because they seriously want to do this for a living. It's not a bad living, guys. You're your own boss. It's fantastic. All right. Cold Minnesota. Holy cow. negative 16 degrees. Man, I don't see how you do it. Why would you even live there? I'm just kidding. I'm just kidding. I know some people don't pick where they live. They just grow up there and it's home. Home is home. But man, that's cold. I'll take my Florida winters over your winters any day of the week. Nvidia. Yeah, I like Nvidia too. Nvidia is a chip maker among the elite chip makers. Computers are only getting faster and stronger. Video games are getting better and better. I am addicted to Call of Duty Modern Warfare 2. I've never been a PC game player. I've always been a console game player. But since I bought this PC, I've been playing Modern Warfare and a little bit of Assassin's Creed on it. And I gotta say, I love it. I don't see much difference in as far as the performance goes. Like I couldn't say that the PlayStation is better than playing on my PC. Graphics look great. So I love Nvidia for a long-term hold. Let's go take a look at them. Yeah, they had got a nice bounce. Same time the S&P 500 did. We were talking about buying these things when they were on the lows. Because remember, I don't know if we're going to get another bear market low. This could be the bear market low. Let me explain that. Nobody knows what's going to happen in the future, not even me. There's no way anybody can say this is the low. And there's no way anybody can say for sure or definite that there will be a lower low. It's just a 50-50 guess. All right? All I'm saying is since inflation is topped out, I started to want to be a buyer on some of these things. So we have been. And that's not been the norm. The norm has been be very bearish because the sky is falling, Chicken Little, right? But unfortunately, that is not what is transpiring here. So they're just talking about maybe a potential mild recession. Brandon made a post the other day, something about being the worst recession we've ever seen. That's highly unlikely. Highly unlikely. I understand the world macro, what's going on out there, how we've invented a bubble and all this stuff, but you know what I mean? The Fed is fixing it. You can see that since the Fed has been hiking interest rates, that inflation has been steadily decreasing. So the Fed is fixing the problem. They will fix the problem. They will. It will happen. Bear markets typically only last a couple years. Most of the time, asset prices are ascending, not descending. So while bear markets are fun to trade, because you can make a lot of money quick to the downside, you will always make more money being long than you ever will being short. You can only make 100% on a short, whereas the amount of money that you can make to the upside is unlimited. You can literally make infinity to the upside as long as the asset continues to move to the upside, that is. So being a long trader in a bull market is going to definitely pay you a lot more than being a bear trader in a bear market. But it does look like it has found a bounce. It was putting in a ascending wedge type deal here. I'm not a pattern trader, so I don't really care too much about them. But let's see if we did have some sort of a wedge formation going on. No, not really. It's more of a megaphone formation than anything. You have broken down, though. You have broken down. So, do we continue lower or does this thing find support? That is the big question on everybody's minds. Right now, you are coming into weekly support. Weekly support is 154.09. So, don't do anything with NVIDIA until you at least get to 154.09. Then we will watch how price reacts to this level. You could potentially get a day tradable bounce at the level, right? Potentially, but we got to see what happens. As far as monthlies go, there isn't a monthly support until you get all the way down to 121.11. There is a monthly demand zone at 142.09, but excuse me, I'm trying to burp and talk at the same time. And all right, there we go. I think I got it. Yeah, so I mean, it does look like this is just a bear market rally. It does. I understand that. But at the same time, if you don't start picking up some of these assets while they're cheaper, you're going to end up being a buyer on them when they're much more expensive. And that's what I don't want you to do. But you have to do it with this. You have to do it smart. You just can't be 100x in all these plays because it doesn't work like that. But adding a few shares to your portfolio here and there, depending on how much money you have to invest, right? You have to have a set amount of capital set aside for investing. You can take small portions of that capital and start adding on these red weeks, red months, as long as you are at a objective support. Okay? I have no trouble with you doing that. Just make sure your downside is capped. You have full control over how much money you could potentially lose. As far as the monthly goes, yeah, I don't like that long wick to the upside, but this could just clearly and simply be a test of resistance. And now you're coming back in to find support. Remember, this support is weekly support. All right. We'll see if that area holds. Well, we may get a test of it by Friday, by tomorrow morning. We may get a test of that because the last couple days it's been bearish. Got a small bounce yesterday that has since been sold off. You can see that's a gap and go. When you gap under the open price of a bullish candle, this is what is called a gap and go. Typically, when you gap above an asset, those are considered to be retest gaps. So what we look for when you gap up on an asset that's moving up is we expect a pullback to potentially fill the gap and then look for that to be bought. But when you gap under the open of a bullish candle, that is usually a time when you can look for downside continuation on the open because you are gapping down under where price opened on the bullish day. What that means is simply anybody that was a buyer on this day, anywhere in this whole entire day, wherever they bought, by this thing opening up under the open, that means everybody's stuck. Not only stuck, but stuck good. Stuck good. So when the brokerage is open, when the New York Stock Exchange opens, you just see price start cascading lower because all those stops, which are sell orders, are getting triggered. On top of that, professional traders or traders that have experience like myself, we understand that by gapping under a bullish open, we know that typically you're going to see downside continuation on those days. So we sell that. hence me getting short on Bitcoin today, right? We sell that because we're looking for that continuation. So short traders on Nvidia today made a lot of money. Can I make a list for DCA and equities for future? Yeah, I can. I have a small list of stuff that I am buying, but right now there's a couple on here that I am not buying. O'Reilly is one of them. O'Reilly had a very, very, very good year. You can see that even though the S&P 500, well, let's just go to January 2022 here. So you can see this thing did ultimately have a little bit of a sell-off. And then once we understood that inflation was still climbing, S&P 500 continued lower. This thing got a run all the way up to all-time highs. So now it looks like you're putting in a topping formation, a head and shoulders, or a Wyckoff distribution, whatever you want to call it. There's so many different names to these patterns. Just understand the dynamics that's behind the pattern. Don't even worry about the pattern itself. Just understand the dynamics at play. You had a pullback here. I was looking for this gap to get filled before even maybe picking up just a couple shares, but I don't like to buy things at all-time highs. This was your all-time high, right? And then you made a big run above it. So I'm looking for when the market puts in the bottom, then a lot of capital that rotated into this asset for safety and security while the bear market was going on, they will start rotating that capital out of this asset. So I do expect this to come off a lot more, but ultimately I will be looking to buy this. This is a long-term portfolio hold for sure, but I want a deeper correction. If I pull this chart out, I want you to just look at this asset, right? There has been some bear markets in there, but over time, this asset only goes up. That's because they make money. They make a lot of money. And until cars are outlawed, I do expect this company to continue to outperform. Look at all the earnings, most of them green. That's good. That's what you want for a long-term investment, an asset that is profitable, right? Because in the long run, it will make you very profitable. So I would love to see a 30 or a 40% correction on O'Reilly. I don't know that we're going to get it. But naturally, Roku, it's making fresh bear market lows. So we have to figure out what's going on with this company. Generally, Roku is a good company. This thing could be getting beat up so bad simply because most TVs now have the same technology, because Roku isn't the only people that do that. Amazon does it too with the Fire Stick. There's a couple others. Google TV does it. So it's competition, but they generally make money too. They were doing very phenomenally well in the bull market in a zero interest rate environment. They've lost 91% of their value. So 70% of the value, the company is still, in my opinion, worth a buy. 91% of the value, there is something going on underlying there in the underlying asset. Something is up. Something is causing investors to run for the mountains on this one. So I'd like to find out what that is, and then see if that is potentially a problem that can be fixed. Because if it could be fixed, I think Roku would be a good buy. If it's a problem fundamentally with the company itself, then I don't like it as a buy. All right, so O'Reilly, Roku, AMD, another chip maker, high-powered chip maker. They do other stuff. They're a fantastic company. They make money. So look for this company to find support somewhere pretty soon. In the next, 6 to 8 months, I do believe we'll have a lot more data, and we'll know we'll have a good rough idea of, are we going to be in a recession? If so, how long? Blah, blah, blah. And then a lot of these companies will start seeing capital rotate back into them. Nvidia, naturally, Intel, all of those, because like I said, computers are not going anywhere. In fact, they're getting smarter, faster, stronger, and better. And it has a lot to do with the chips themselves. All right. So I like all the chip makers for long time buys. Apple is just a safe bet. Apple is a safe bet. AZO, I don't know about this one. It's the same as O'Reilly essentially, but it's a very expensive stock. This is AutoZone. Cars will probably still be around for the next 50 years. I do not see public or personal transportation being made illegal anytime in the future, at least not for my life. So, auto parts, as long as there's cars, you're going to need auto parts, right? And as long as cars are on the road as rampant as they are today, then these are good bets. Art K is a growth play. Kathy Woods has took this ETF and invested it into high beta plays like Tesla and all that stuff. So it will outperform in a bull market. It will outperform the S&P 500. But you can see just how bad it performs in a high interest rate environment. This thing has gotten absolutely spanked. And sorry if I'm popping on the microphone. Let me move it down, or here, I'll move it up away from my mouth, but still pretty close. I have to speak directly into this microphone. It's different than the other one. It's a far superior as far as quality than the last one and sound. It's the top of the line. I spent a lot of money on this microphone. So it's a good one. Anyways, Art K, yeah, it'll generally outperform in a low interest rate environment. In a bull market, it'll outperform. Microsoft, love them. Then you got your Googles and stuff like that. But you do want to get some value plays in there. That's where the AutoZones and the O'Reillys come in. I'll build a portfolio. I can give you a portfolio right now for that has outperformed it's outperformed the S&P 500 for 20 years. That's through rising rates and lowering rates. That's through both of those regime changes. So no matter if you're in a bull market or in a bear market, this portfolio will outperform, or has in the past. Let me see if I can find it. It's not far away. But you will have to run a scan for it. Just bear with me. Here, let me do this off screen as to not make anybody dizzy. Just give me a second. Damn it, I can't find it. I will find it. It's posted on the Twitter. I've passed it up because I'm all the way down to the do you eat meat stuff. Yeah, way past it up. All right. I guess it doesn't really matter. It should be right around there. Right here it is. All right, here it is. So, question, what do we do with our money? A, profitability. So, you can run a scan for this. There are free stock scanning stuff out there. But you want to screen the SPX index, right? All the companies that are in the S&P 500, you are scanning for highest momentum, all right, plus highest value, plus lowest volatility, plus highest profitability. All right, once you have those, you just buy the top 50 of those assets. Once you run a scan for those four things, then you rebalance that every quarter. So what I mean is every quarter you get rid of the low the ones that are not performing, you get rid of them. You run the same scan over again. All right, you're going to get 50 different companies this time, but you'll see a lot of the same ones, but there will be a few different ones. Then you rotate those new ones in. And you just do that every single quarter. That's the strategy. That's it. That's what you do. And that strategy outperforms the S&P 500 back tested for over 20 years. Right? Highest momentum, highest value, lowest volatility, highest probability. Highest profitability. So that you're buying profitable companies and you just rebalance it every 50 years. It's right there. That portfolio outperforms the S&P 500 every time. Every time. How are precious metals doing? Well, I don't know if silver is considered a precious metal, but I mean, I'm sure it is. It's doing good. As long as you got dollar weakness, then these things are going to get a bounce because they're traded against the dollar. But ultimately, if the dollar hasn't made a top, then these will probably go make another low. But they had a perfect measured move off the lows. If these are the lows down here, then you could look to be a buyer of them. If we're going to see dollar go lower, if the dollar is going to go lower, then you can look to buy support. There's nothing to do with it right now because from this upward expansion, you are at the top of it. You're currently setting at the highs. So you need to see a correction, probably down to 2097-ish first. Maybe it comes a little lower, 2002-ish. You could look to potentially do something there. Once again, it's going to be heavily on whatever happens to the dollar because they are traded directly from the dollar. It looks like silver is outperforming gold. Gold is finding resistance. So right now, you do not want to be a buyer. Look at that. For the last 4 weeks, you have been trading and trying to get above 1802 spot 02, and you have been unsuccessful. Still are. So same scenario. If this week fails as well to close above that, I would expect in the next week or so that you start to see that pullback. And if you do start to see that pullback, first place to look, 1749 or 1750. That's weekly support. And then the next place, 1692. And I don't know any other. I don't have any gold or silver. I mean, gold and silver, that's to me, that's like the past, right? Owning some gold and silver, like the actual physical items themselves, It's not a bad idea in case the world does end, because you're going to need something to barter with other people in order for you to get goods, like food and warm clothing and stuff like that. And gold has always been the metric used in the past. So before there was a monetary system, gold was everybody's favorite. Everybody likes gold because there's multiple uses for gold. It's got a value to people because it's shiny and pretty, right? It for jewelry even. So buying, a couple, bars of gold might not be such a bad idea, but I don't know about as far as is it something you want to invest in on a longer term. Um, Higher interest rates also means, I think, probably that you would have to pay more money to store it. So you don't want to buy a lot of it because then you'll have to pay those storage fees. But I'm not much of a gold or a metals trader myself. I'm more Forex, stocks, crypto. But price action is price action. It works the same no matter what. If it has a candlestick chart, it will work. There is no intraday trades on the S&P 500 as we discussed this morning already. You are seeing a continuation sell-off. You cannot short it because you're into support. The trade has already happened. All right? If you try to take a trade now, you are going to be chasing price. And if you try to buy it right now, there's a pretty good chance you're going to get stopped out. There just isn't a trade to take on it right now. The trade was earlier, not right now. There's the open. So you can see what has happened on the open. As soon as it opened, it just started cascading lower. There's not a trade on it. You have to watch the big important levels. Like on the SPX, you're not at weekly support yet. On the SPX 500, which is a CFD, you got a lot closer to the weekly support. That's the level I was saying that you need a test of it first, but you just haven't gotten there. You're not even nowhere close to it. Intraday support did not hold. You broke right through it. You're breaking through a next intraday support. There's not a trade to take. You're at daily support. So if you got to trade, if you just can't help yourself because you just want to lose money, then buy 38.13. But don't get mad at me when you get stopped out an hour or two from now. You have a bearish engulfing candle on today in a downtrend. Remember, bearish engulfing candles are big signals in downtrends. This was simply a profit-taking bounce for the shorts. That's profit-taking bounce. The shorts re-entered the trade today. And you have more people just selling because of the bounce. So put yourself in people's shoes here. The people that bought here, right? Just pretend you're them. Are you going to let price come all the way back to your entry before selling? No, you're not. So what happens? You wait for a bounce to sell it. When you get the bounce on the open, you sell. You hit the sell button. That way you can escape the market with a little bit of profitability. You have that happening today, and then short sellers jumping all over the asset because, well, on the it was, yeah, it's just a bounce in a near-term downtrend. There is no buy trade to take, in my opinion. Could you tag that level and bounce? You absolutely could. How far is it going to bounce? I don't know. Is it going to bounce? I don't know. But it is a high probable level. 38.11. You look to be a buyer there. And then in price goes in your direction just a few ticks, you exit it. And then you're done for the day. You don't try your luck again. Every single day there isn't a trade on just this asset. Right? There are trades every day, but as you can clearly see on the open, this trade was a sell. Here's the bounce you're getting on Bitcoin right now. You bounced up to about the midpoint of the last sell-off candle. So that's typically not what you want to see for bullish continuation. So more than likely, remember how I took profits? Well, other people took profits too, and that's why you're seeing this bounce. And then you also have little buyers trying to pick the bottom of the market. You get those buyers, and then the buyers like me. Ultimately, sellers come right back into this stuff. It's just not a trade to take, unfortunately. I'm sorry about that. It's probably not what you want to hear. You want me to tell you where to buy, where to sell, so that way you can make money. But if there's nothing to do, there's just nothing to do. The sell on Bitcoin was earlier this morning, unfortunately. You just got to get in the Discord because the trade in the Discord was spoken about. It's impossible for me to be able to consistently come out here and give you trades every single time because if there's just not a trade to take. Let's see what's on the hot list, see if anything's buzzing today. Well, THMO's up 4,000%. That's got to be a buyout or something. That's got to be, something's wrong. Yeah, that's just wrong. It's not up 4,000%. It says it's up 4,000%, but it's not. Yeah, at best it was up 150% at one time. I'm not even 100%. Sorry. That's $4. You were up 150 pips. You were up 36%. This thing says 4,000%. That's definitely a typo. This thing's trading up above daily res. But you have a resistance right here. And would you look at that? It's like magic. Now the sellers are coming back. Look at that. Boom, boom. Tell me people weren't selling 524. Yes, they were. Why were they selling 524? Because it's resistance. That's why. Objective resistance. The strategy works. The strategy works. Get the ballast dual wield on COD. Anthony, I have the dual wield on the Eagles right now. I'm not very good at the game, man. I am by far like low tier as far as game player. It's not something that I would ever stream or anything like that because unless you want to see me get, killed 18 times and me pull out like 8 or 9 deaths, kills, then yeah, no, I'm not that good. My KD ratio is like 0.7%. Like it's under a 1-to-1. I am not anything special. There are some real killers in that game. But yeah, I don't. It takes a long time to level weapons up, and I don't like the way that you have to do it. Like sometimes you have to use this crappy gun and level it all the way up to 20 just to be able to unlock this gun. So that way you can then use that gun, level it up just to get to the gun that you want. It's very weird. But that in itself hurts my kill death ratio very badly if I'm using a gun I absolutely despise using. But I got the Akimbo Eagles yesterday. I spent a double XP weapon token for 1 hour, and then Steam crashed. Steam crashed, and I couldn't get logged on for like 45 minutes. So completely wasted a double XP weapons token to try to get Akimbo Eagles. But I did it. I played with it for like 20 minutes. To be honest with you, at close range, I would rather have a shotgun all day long. I got all my shotguns, every single shotgun in the game. I have leveled up to max. So I got all the cool toys to put on the shotguns. And at close range, I would much rather have shotguns than dual wield Akimbo or Akimbo Eagles. But maybe the other ones are better. I'm gonna try to get the dual automatic Glocks. Those look pretty fun. They at least piss people off. Run up behind them and brrr. Looks like fun. The game itself looks so beautiful, and the graphics just blow my mind. The last system that I owned was a PS3. So I haven't been a gamer for many years. I haven't even owned a system to play games. I got this computer. This computer is powerful enough to play games on it. So I said, what the hell? Let's get a couple games on it. Because I do like playing them. And I do have time to play them. It's just, yeah. I just got this computer about 4 or 5 months ago. So far, I'm loving it. I'm loving it. Absolutely love it. They also have a third person shooter view on, like the old SOCOM back in PS3 days. That's my favorite style of gameplay. So that's where you'll find me. You'll find me in the third person online, third person. Under Trade Talk. If you ever see me and you want to add me, add me. All right. XLY long, says Brian Rubin. Let's go look at it. XLY. Oh, I typed in the wrong thing. XLY long. What is this? Oh, the internet's just terrible. Hang on, give it a second. There we go. It's getting killed today, but let's go look at it longer term. See what's up. It's getting killed. It's been getting killed. Whoo! XLY long. Yeah, I don't know about that, man. You've liquidated everything that you need to liquidate on a weekly, so you're still pushing, which means the market is looking for more liquidations. I wouldn't even think about getting long on this asset until 127.79. Leave it alone until then at least. Because since you took out these lows here on this liquidation, boom, right? That makes this low the next point of liquidation. What'd you do this month? You liquidated last month's high, and then you stretched all the way out. So this obviously looks like, to me, that is the bearish target. So wait for 127.79 before you attempt a long. I know that you kind of know what you're doing, so you know what to do. If you do get a tradable bounce there, that's where I would do it. I wouldn't do it anywhere else. Get a wick under 127.79, maybe buy some 126 calls, and if you could get it back up to 130, that's a $4 trade on every contract you own. I love it. But wait for that to happen first. If you don't get any bullish bounce, then this is where it's coming. 121.92. This will be the next place to look. Because even in the weekly, it's liquidated everything. Everything. Oh, you're currently trading inside of this candle's low. This candle. So that means the next liquidation point on that weekly is there. You see what I'm saying? So I do expect you will get a tradable bounce at 127.79. Just wait for it to get there. In fact, I'm going to set an alert at 127. I'm going to set an alert there so that way I can join you on that, because I do believe we will get at least a tradable bounce. I'm not looking for bullish continuation. So don't buy that there expecting it to just go back to all-time highs. We are buying it specifically for a tradable bounce only. We're just buying it, and when price goes in our direction a couple ticks, we're going to sell it. But I like it there. DXY bouncing off weekly. Bitcoin bounce off the old daily 2-year and 2 weekly or daily res. Could this be the biggest bear trap in history? I am not trading this until I see clear direction, but damn, maybe. Hey, RK, I am short the dollar. I took the short on the dollar versus the Japanese yen. I am short at almost the top tick. So we've seen the bearishness coming for the dollar. Is it possible that the dollar is just putting the biggest bear trap in history? It's unlikely. Typically, all you need is 1 day or 1 week on a bear trap. You know what I'm saying? This to me looks more of a blow off than a bear trap. That's a nasty expansion right there. So yeah, we're short this. We've been short this since it rolled over. And we don't see any reason why to close it. You are getting very, very close to 103.21, which is definitely a demand zone. So that could be why you are seeing the bounce, correct? But if this is going to be a bear trap, yeah, I can't buy it because I have a bearish bias. And the reason, my reasoning behind it is simple. I'm a very simple guy, right? As long as you're trading under the weekly 21, you got to look for bearish setups. I can't sell it at support though. You're clearly at weekly support right there. You're at the 50 on the weekly. The 50 on the weekly. You do got plenty of room to go before you're oversold on the weekly. So this little stutter step here at weekly support is just that, a stutter step. I will remain bearish on the dollar as long as it's trading under 107.02. If you close weeklies above that, more than one, plural, not just one, but if you close like 2 or 3 weeks in a row above this price, then I will close my short position, or at least take the massive profits that I'm currently working with on that short trade. It's one of the best trades of my year because we definitely nailed the top, almost the tip top. And it has just been straight down ever since. That's why I think there could be a very high probable chance that the lows are in on the risk markets. So If the dollar ends up making fresh highs, getting back above 114, I will be wrong. You know what I'm saying? And you'll probably see fresh bear market lows. Can you talk a little bit more about IV on options? How does that work? Also, what do you think about long-term deep in the money calls where delta is closer to 1.5 year long contracts? I would have to pull up Thinkorswim for that. Give me a second. My internet is already starting to lag a bit, so it might bring it down a little bit, but let me see what happens here. All right, and then what did you say exactly? Vic's getting a nice bounce this morning. All right. Ali says, can you talk a little bit more about IV on options? How does that work? Also, what do you think about long-term deep in the money calls? On what? On what trade? Long-term deep in the money calls on what asset? By buying long-term deep in the money calls, that just means you're expecting the market to continue to go up from there. I wouldn't do that, because buying calls means you want the market to go higher, right? So you're already buying an option that has a significant amount of intrinsic value on it already. Buying just at the money or a little out of the money means that you will get a little extra money from the IV, but at the same time, time decay and all that stuff really hurts you as long as the option is trading out of the money. But here, let's go over here to the VIX. Implied volatility is how the option market prices in ranges, if you will. So if we go over here to charts, you're going to see that currently I have the VIX pulled up here. And with implied volatility, it gives us something called an expected move. An expected move. How is implied volatility calculated and all that? I cannot give you the answers to. I do not know. They use an algorithm and they calculate volatility. They calculate direction, which is called delta. Volatility is vega. Time decay is theta. There's a lot of stuff that is in an options pricing. So that's how they determine the value. The implied volatility is the expected move. That's what implied volatility is. So right here you can see this week the implied volatility, the options market was pricing in a potential top or around 24.49, and the implied volatility is the same to the downside. So when it's calculating it, this is your implied volatility over here. All right. And then here are your strikes on the asset. So if we are using the VIX, for instance, let's go out. You said specifically what, like 1.5 years? So all we can do here, that would be like August 2023. The implied volatility is very high out to there. So that means you're going to pay more money for the premium because you can see how the implied volatility, well, the implied volatility, that's the move in dollar terms. Sorry, this is your implied volatility. Implied volatility does decrease the further out that you go, meaning that the options, they will be more expensive out there, but you will be paying less for implied volatility. But the market is only expecting an $8 move in a year and a half. So that's how implied volatility is used to dictate potential price movement. So since the implied volatility on the last one, which is about a year and a half out, August 2023, it's saying that the market is expecting an $8.48 move. So in a year and a half, the market makers are expecting this thing to move $8 higher or $8 lower. All right. So IV works both ways. It's delta neutral. It's I almost said non-binary. It's non-directional. It's $8 higher or $8 lower. So if we look at that on a chart, $8, right? If you were to buy it today. So the close is here. So $8 higher in a year and a half. That'd be trading at $29. So up here, roughly. If it goes higher, right? Or if it's going to go lower, then $8 lower from the close. So from 21.62 down to what? 12, something like that. Right? Just $8 lower. That's how implied volatility is used. How is it calculated and all that? I can't answer that. I don't know the algorithm that is used in order to do it. But you don't want to buy premium with high implied volatility, because this week, for these 5 days, the premium that is calculated in those option strikes is with an 80% implied volatility attached to it. So if it's looking for $1.70 move up or down. So if it doesn't even go that far, but it probably will because we know volatility is high right now, then that IV will start to shrink the price of the option. So if it stays like trading sideways, you're going to lose value on the premium that you paid for because of time decay and because IV shrinkage, if you will, right? Because the less volatile an asset is, that means the implied volatility goes lower. So when an asset explodes in volatility, it's better to buy, further out, because you get cheaper implied volatility. They're only looking for 69% implied volatility this far out. But if you get like some massive move based on some massive news that comes out, then that automatically jacks the IV up. The implied volatility goes up. And as the implied volatility goes up, the price of the option will go up. So even if the market's like going, your premium will be worth more money if you sell on a high IV day, if that makes sense. If you bought the option and it's going in your direction, plus you get an expansion in implied volatility, then you're going to see a massive rise in the price of that premium. Basically, that's what happened to me. One time I bought some airline calls, and I'm not going to say exactly which company it was, but I bought them for like really cheap, like 40 cents a contract. It was really low IV. The markets were basically sideways. And then some great big gigantic news thing came out, and the stock went from like $6 or $11 all the way up to $27 in the span of 2 days. When I bought it, the IV was low. When I sold, the IV was up at like 150. So just by that happening, made the amount of the premium explode. So it was like a 1,000% gain. It was like 900 and something percent gain based on the fact that I was right on direction, as well as the implied volatility getting jacked way up. But it works exactly the same way if the implied volatility goes way down. So you can be right on direction, but if the IV starts to shrink, every single day, then you could still lose money on the premium you paid. You can still lose money on it, even if it's going in the right direction, simply because implied volatility is shrinking. So options is tricky. I would wait. You know what I mean? There's a lot to learn especially long option strategies, especially that just buying premium. Doesn't matter which side, it's the same, right? It's still the same, no matter which side. Whether you're buying puts or calls, it's all the same. You just got to be very careful, because that's happened to me a lot. I've been right on direction and still lost money on the trade because the IV went down instead of up. And that will typically happen to an asset that's going up. So in order for implied volatility to go up, the VIX itself has to go up, because that's where the VIX is volatility. So the implied volatility pricing mechanism is coming specifically from the VIX price. All right. So if the VIX goes up, implied volatility goes up. If VIX is going down, then implied volatility goes down. That's why in a bull market, it's very difficult to make money buying calls in a bull market, because even though you're right on direction, since the VIX is going lower, that's causing your IV to drain, your implied volatility to drain. The lower the prices get on the VIX, the lower the implied volatility goes into the calculation of the premium. So typically looking for IV boosts, you're looking for puts, you're looking for downside moves, because that causes the VIX to go up. So that's why a lot of people love trading options in a bear market, because you get that implied volatility boost. So you be buying puts, get an implied volatility boost. And if you're buying them far out, that's even better, because you're not losing money on time decay. There's a lot to it, but it would take me weeks to months to build an options trading course. And I know for a fact there are a few really good option channels out there that you don't have to buy their course. You can just watch their videos and they can teach you everything about the options market. The recommended channel now these guys, they sell a course, they sell stuff. So you're just going to have to put up with that. You don't have to buy their stuff, but they will try to sell you stuff. It's TheoTrade. The guy that started TheoTrade, Don Kaufman, he is a real live legit trader. He did in fact trade in Chicago Mercantile. He helped build Thinkorswim, the platform. He ran the training division on the Thinkorswim platform. He is legit. He does have a YouTube channel. It's called TheoTrade. You can learn a lot just about basic options stuff there without paying him 1 cent. All right? You don't have to pay him, but you can learn quite a bit of your standard option stuff. And I vouch for the channel, because the dude himself has been a trader his whole life. His dad was a trader. His uncle was a trader. That's how he got into trading. He has a college education, and he's very good at trading. He doesn't try to pick direction. He doesn't believe in technical analysis or any of that stuff. He simply is a math guy, and he uses math to make a lot of really cool option strategies. He whips up some option strategies that's blown my mind. and I've been trading options for a long time. So if you're going to try to learn options, I suggest you go somewhere like that. Theo Trade. They're really good at teaching people stuff about options. If you want to buy their course and take it for a step further, go right on ahead. It's your money, but you don't have to. All the information that you need to know in order to be a successful trader, you can get for free. Okay? You can. You do not have to pay for courses. Yeah, they are legit. They're strong. Anthony, I just put the long barrel on it and I was sniping people from halfway across the map with that beast. And if you get a headshot, like I wouldn't put a scope on it or nothing because in third person, the crosshairs are just directed out in front of you. So you just, when you pull your pistol up, there's just like two little dots and a tiny little crosshair. You put that on some dude's head that's just laying there camping. You can take their head off from halfway across the map with it. And if you get a headshot with an eagle, it's a one shot, one kill. Love it. Love it. Sometimes I just run around the map with just the eagle. I get smoked a lot of the times, people popping out from a corner and hitting me with the Finnick, but you know how that goes. It's an awesome game. I love it. I get so pissed off at it sometimes, but when I'm doing good, I love it. How about shorting copper, front running the housing crash? I don't know that a housing crash is coming, but we can go look at copper prices. Wait, I don't want to look at copper futures. I want to look at the spot price or the CFD. If I can get the internet to pull up. It had a nice run up. Naturally, it did. Most metals did do good. Fear of inflation and all that. Yeah. Yeah, I mean, if you think the housing market's going to collapse and you think that's going to affect copper, right there is weekly resistance, $3.92. You have a new weekly resistance right here. So it looks like this week tested it and is pulling back already. So ultimately, that's probably where I would have been looking. Well, not probably, that's definitely where I would have been looking for a short trade. You couple that with the fact that you have a daily supply zone right there, and just look at this wick today. Right there. Boom. That would have been the short entry. You did take out support to the downside here. So it does look like you will be seeing downside continuation from here. Next place to look for potential retests, $33.81. If you get a stab up to 381, as long as you don't close a daily above this price, you can look for short entries there. All right. MSTR, MicroStrategy. It's doing the same thing that Bitcoin's doing, only it's almost back down at the lows. You can see that it didn't have a big, the FTX crash didn't really affect it as far as making it come down and take out the June lows, well, the May lows on this. But it has been getting hurt the last couple days. So this does look like a bear market rally. I mean, Bitcoin looks bad too. That's why we've been looking for shorts on it all week, because that was the trade to make. That's why I shorted it today. That's why we were looking to short it on the FOMC meeting. That's why we've been pretty much consistently looking for shorts on Bitcoin since the Fed meeting. And that has been the trade. But yeah, I mean, I don't think I would be looking for fresh shorts in the MicroStrategy right now. That's just you're just going to have to wait for that to come into some support, let it get a bounce, and then if it does bounce at support, then look for an area of resistance to short it again. But it doesn't look great. But if Bitcoin finds a low pretty soon, or whenever it finds a low, MicroStrategy will be a good thing to buy. If you don't, buy or hold outright spot Bitcoin, 87% off. I don't really know. I mean, since they own so much Bitcoin, their price is really tied with Bitcoin's price. This asset is now probably going to perform in the same manner as Bitcoin did, irregardless of what the company itself is or does. That's just because so much of their balance sheet is now is Bitcoin owned. So now investors is basically trading this just like they're trading Bitcoin. So it's probably going to follow Bitcoin for a while. Using Linux, Windows, or Mac. I am using Windows. This is a custom built PC that I had Digital Storm make. Digital Storm. I was told that it was a little bit pricey. Like I could have found a better company to custom build my PC, but I put most of the power in the processor and stuff like that, the hard drive, more so than the graphics card. It does have an NVIDIA graphics card in it, not top tier graphics card by any stretch, but it's mid tier. The actual computer itself was designed for editing videos and being able to manage multiple programs being open at once while doing a live stream. It's a powerful computer. It's the most powerful computer I've ever owned, and I love it. I mean, I have not had a problem with it. They took a long time to build it and get it to me, I can tell you that much. But once I got it, I love it. I love it. I don't have affiliate with them or nobody like that, right? But it's a good PC. It's a Windows PC. I'm running Windows 11 on it right now. My laptop, which I keep in the living room, it's got Windows 10 on it. I've never owned a Mac, but I used to be an iPhone guy. I have only ever owned Windows computers, so I can't even tell you anything about a Linux or a Mac. Never used one. I've used iPads and iPhones, but never a Mac. So as far as Windows goes, yeah, that's what I go to because it's what I know is all. I'm not saying that I don't think that one's better than the other. They're just different. They all do about the same things. Third person Call of Duty view is great. Love peeking corners. That's the only way to do it, man. Running around the map, unless you're trying to be a knife wielding bandit and rack up kills on them small maps, I don't see why people do that because that destroys your kill death ratio because someone's gonna pop you. You're gonna turn a corner and someone's gonna be waiting for you. They're gonna watch you run all the way down the hallway with your little goofy helmet and your little goofy knife, and they're gonna get within 5 feet to them, and they're gonna pop out and blast you with some double out buckshot to the face. Yeah, it's bad. I got that dragon's breath shells too, so not only does it explode on contact and catch you on fire, but it throws the bodies back like 20 feet. It's awesome game. I have a lot of fun with it. A lot of fun. I just want to wish I was a little bit better. Where do people buy better systems? I just, like I said, I used Digital Storm. Haven't had any trouble with the PC at all. And as long as I own the PC, I have 24/7 customer service through them. And if anything were to massively go wrong with it, I could ship the system back to them and they could either repair it or whatever. I love it. It's been a great computer. It's got all the lights and all the fancy gizmos, and it's got like 437 fans. Obviously, I'm exaggerating a lot. It's got 7 fans, I think. It's a big system though. It's not like a I thought it was going to be a small system, like a small box. When I got it, I was like, where the hell am I putting that thing? That thing is big, man. It's got the glass enclosure, so and the glass just comes off real easy, the plexiglass, so I can clean the inside of it. I love it. It's the best computer I've ever owned in my life. Fantastic computer. And it's quick. I turn it on and it's on. Like it's ready to rock and roll. Ready to rock and roll. It's got a couple terabytes hard drive, 64 gigabytes of RAM. It's a badass computer. Strong, powerful. I've never lagged it down. It runs the game just fine. Most of the time that I crash is based on my terrible internet. My internet is what kills the crash or what kills the longevity of the game. But it doesn't crash all the time. And some of the crashes has been Modern Warfare's fault. So they've fixed a lot of it. It's a fun game. Thanks, Heath. You guys are welcome. In a computer shop, not a trade channel. I don't know what you're talking about, old rope. Let me see here if I can find your earlier question. Yeah, there just wasn't a whole lot to do trade wise today. The Bitcoin trade is we already took it. We already made money on it, and it happened before the stream went live. Unfortunately, that's sometimes that happens. So I'm not quite sure what you mean by that comment. Gotcha. You were just being a smartass, huh? Right. Yeah, we're gonna wrap it up. You guys have a fantastic rest of your day. You won't, well, the Discord members will obviously see me, be able to talk to me and stuff, but I won't see you YouTubers until Tuesday of next week. And after that, Christmas will have been over with. So I want you all to have a very happy, Merry Christmas, whatever it is. Like I said, whatever holiday that you celebrate. Celebrate it good. Be with loved ones. Unplug. Unplug. There's no point in watching charts on Christmas Day. We know Bitcoin trades 24/7, but there's no point in watching it. Enjoy your family. Enjoy the little things. That's what makes life worth it, is those little memories. I'm myself going to be cooking a prime rib. Can't wait. It's going to be a fantastic day. I love you all. Thank you so much for your time. As always, I really, really appreciate all the love and respect that you guys give to me on a consistent basis. Thank you so much. Merry Christmas. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody. And if you are on Call of Duty and you want to look me up, it's just Trade Talk. All right? Hit me a friend request. I'll accept it. Thanks, guys. We'll talk to you Tuesday morning.